In today's video, I'm going to explain to you very simply, what is a 401k? What are the benefits of a 401k? And what are the drawbacks of a 401k? So if your employer is offering you a 401k plan, then it's extremely important that you know this information. Just so you know, I already made a separate video about how to use your 401k properly so that you can retire faster. But if you're a beginner with 401ks, you should watch this video first. So I'll leave a link to the other video down below. Okay, so let's answer this question first. What is a 401k retirement plan? So I'll explain it to you like this. Let's just say that you land a job and your salary is $120,000 a year. That means that you're making $10,000 a month. So let's keep things simple. Let's just say that you get paid monthly. When it's payday, as you know, you're not going to get that full $10,000. Your employer deducts money out of your paycheck and you receive whatever's left over. They deduct taxes, maybe health insurance, etc. Well, the 401k works the same way. You can choose to have money taken directly out of your paycheck and have that money put into your 401k retirement account. So obviously, if you choose to do this, then it's an additional deduction from your paycheck, and you will have less of your paycheck hitting your bank accounts. So essentially, a 401k is a retirement account offered by your employer where you can invest your money in stocks, bonds, or other investments. So a good question is, well, can't you just open up your own investment account outside of work to invest in stocks and bonds and other investments? And the answer is, yes, you certainly can. However, if you use the 401k account, then there are benefits, and they are significant. So here are the three biggest benefits of using a 401k to invest your money. So the first one is tax deferral. So the money that's deducted from your paycheck and put into your 401k will not be taxed. Now, to clarify the situation, if your salary is $120,000 a year, then you will have taxable income of $120,000. But if you put $10,000 into your 401k retirement accounts, then your taxable income will be reduced to $110,000. So essentially, you will pay less taxes. The second benefit is tax-free growth. So the money in your 401k retirement accounts will grow tax-free. So this is a huge benefit. And the third benefit is the employer match. So this one's a big deal. Many employers will offer you a matching contribution. Okay, so what does that mean? It means that if you put money into your 401k, your employer will put in extra money for you. So for example, let's say that your company offers you a 50% matching contribution. So that means that if you put $10,000 into your 401k, they will put in an extra $5,000 into your 401k. So some companies will be generous and they'll offer you a 100% match. In that case, if you put in $10,000 into your 401k, they put in $10,000 as well. But other companies may offer a 25% match. Some stingy companies may not match at all. But about 90% of companies offer a 401k match. Ultimately, a company match is basically free money, and you should take full advantage of this. So a company will offer you a matching 401k contribution as a perk. It's an incentive to keep you happy so you don't quit. Now, let me tell you about the drawbacks of a 401k. I'll give you the three biggest ones. So the first one is that your money is locked up. So when you put money into a 401k retirement accounts, you're not supposed to withdraw that money before the retirement age, which is set at 59 and a half years old. If you do withdraw that money before retirement age, then you will be penalized. The penalty is 10% of what you withdraw. So for example, if you make an early withdrawal of $20,000, then you will need to pay a penalty of $2,000 to the IRS. So there are some exceptions to avoid the early withdrawal penalty, such as you become disabled, you die, first-time home purchase, etc. The next drawback is fees. So the 401k plan has fees, and sometimes they can be expensive. The fees depend on the 401k plan sponsor, so make sure that you know how much it is. Annual 401k fees can be as low as 0.5% or as high as 5%. The average is about 1 to 2%. The third drawback is limited investment options. So in a 401k plan, your investment choices may be limited. Depending on your investment strategy or goals, you might not be able to invest in what you want to invest in. So personally, I don't think that this is a problem, but some investors that want specific investments may not have certain options available in their 401k. Now, let me give you 5 very important facts about the 401k that you need to know. So the first one is the contribution limits. So there's a limit to how much money that you can contribute to your 401k each year. Right now, it's $23,000. The contribution limit gets adjusted for inflation each year. And you could put in an additional $7,500 if you're 50 or older. So this is called a catch-up contribution. Number 2, contribution flexibility. So you can decide to put as little as you want into a 401k plan. So yes, $23,000 is the limit, but you can put in $5,000, you can put in $300, you can put in 0, and you can change the contribution amounts. Number 3, taxes upon withdrawal. You will be taxed on the money that you take out of your 401k. The reason is because the money that went into your 401k was never taxed. So when it comes out, it's subject to tax. So 401k withdrawals are taxed at ordinary income rates for federal income taxes, no different than wages that you earn at your job. But the theory is that you'll benefit because in retirement, you're probably going to be making less money. And if you're making less money, then you'll be in a lower tax bracket. Number 4, the Roth 401k. Your company may offer you a 401k and a Roth 401k. So they're both 401ks. It's just that the Roth 401k has different tax characteristics. So with a 401k, you are not taxed on the money that goes in, but you get taxed on the money that comes out. With a Roth 401k, it's the opposite. So you're taxed on the money that goes in, but you're not taxed on the money that comes out. I have a separate video that covers which is better. It depends on your situation, but we're not going to get into that today. As long as you're saving money, I'd say that's a good thing. But I just want you to know that you can put money into both a 401k and a Roth 401k. It's just that your total contributions for the year cannot exceed the $23,000 limit. Number 5, when you leave your company, this is what's going to happen. The money that you put into your 401k is yours, even if you leave the company. They can't touch it. However, the plan is with the employer. So when you leave your company, you're going to have some options on what to do with the money in your 401k accounts. You can leave your money in the accounts. You can transfer it tax-free to your 401k at your new employer. You can transfer it tax-free to your individual retirement account, your IRA, or you can cash it out. But if you do that, beware of the early withdrawal penalties and taxes. Okay, now here's my advice to you. Now that you know more about the 401k, next, you should watch my other video, how to use a 401k properly to retire faster. I'm just trying to help you out. Please subscribe. Thank you for the support, and I wish you a very nice day. Take care.